welcome to Indianomics. This special edition comes to you from the State Bank of India's Banking and Economics Conclave. The highlight of this very interesting conclave was a conversation between two of the most powerful personalities in the financial space today, Reserve Bank Governor Raghuram Rajan and the State Bank of India Chairman Arundhati Bhattacharya. We catch the conversation at the point where Mrs. Bhattacharya asked the governor why did he give 11 payment bank licenses and would not the legacy banks get cannibalized in the process?
In the last 18 months or so, we have seen 13 new banks come into the space. So do you think Indian banking has matured enough to take on this onslaught? That's number one. The number two that I would like to ask is that do you or does the RBI see this as a first step towards at least some of these evolving into universal banks? Okay. And the third is, given the fact that in the last 6 or 8 months, we have seen such a huge number of financial inclusion accounts getting opened, is this the right time for these banks, or are they delayed, or are they ahead of time?
Well, one of those banks is you, so we can take that away if you want. But look, first I wouldn't say there are 13 new banks. I'd say there are 2 new banks and 11 payment banks. And I want to make that distinction clear because I don't think those 11 banks are a comparative threat to the existing banking system. Instead, I see them as an add-on. In the same way as your relationship with Reliance, I think the other banks will also benefit from this relationship rather than be competed out. I think the board took the view that it was hard to forecast what would happen in the space, but the payment space was perhaps one of the most exciting from the country's perspective, both in terms of the use of technology, but also in terms of finally reaching traversing that last mile in a very effective way. And given that we didn't know what could succeed, the board took the view that let's license a variety of players, some tech companies, some finance companies, some bank mobile combines, a BC, and see how it develops. And I think this is actually a different view of regulation than in the past. Of course, there were concerns expressed about safety and stability, about the impact on the existing banking system. But I think after a long deliberation, the board concluded that these new banks would be additional. They would not compete as much as complement the existing system by traversing that last mile. And the reason for that is the universal banks can do anything these payment banks can do. And the payment banks can't do some of the things the universal banks can do. So in that sense, the payment banks are really useful only because they bring new players into the system who have existing businesses that can reduce the cost of access. And therefore, the payment banks will serve as feeders into the universal banks. If you want a long-term deposit, for example, you put your money in a payment bank which has an alliance with the universal bank and it gets shifted into a associated account with the universal bank links to the payment bank account. So I see lots of possibilities here. I don't see as much a threat to the banking system. Now in terms of migration, next month we hope to announce the small finance bank licenses. There will probably be a migration path from small finance banks to universal banks. I don't see that path as easily from payment banks to universal banks. And when we're talking about migration, we're talking about a long time proving yourself in that area before the migration takes place. And then the last question was the new accounts. This is where I hope the payment banks will provide the access to the enormous number of new accounts created by PMJDY. Again, we should find ways to collaborate, to complement, and I think that will be really the benefit from these banks.
It was the governor's chance to quiz Mrs. Bhattacharya, and he asked her what she made of the turn in the economy. Could she feel it in the quality of loans?
I'm interested in your sense of where the economy is right now.
Right.
How you see credit, how you see pickup, how you see rural areas versus urban areas. Just your sense of what's going on.
Sir, actually, we have been watching this very, very closely. As you know, the first quarter results, we showed a growth of only 6.6%. And that was a little masked because the domestic growth was actually at 5.5%. And it got masked because the IBG book, the international book, grew faster. So obviously, we've been very, very concerned. But we believe as of date that there are more green arrows than red arrows. And the reason we think of it that way is the following. One is, of course, the fact that we've seen in the big capital goods suppliers, there has been an uptick in the order book. The second thing that we are seeing is also that if you look at the IIP numbers, if you actually strip out the electricity growth, it is at around 4.2. Otherwise, it's at 3.8. And if you look at the SBI index, the YOY there too, we are seeing the number at about 53.6, which actually translates it into some 4.5% of growth, of industrial growth. So manufacturing does seem to have got off the bottom. Also, along with this, we are seeing 2 or 3 other activities that are slowly beginning to revive. One, of course, is the mining sector, where we have seen that some amount of mines have opened up, and we are waiting till the end of monsoon, actually, for them to fully become functional. And as a result of that, we are also seeing some uptick in the heavy commercial vehicles. Their sales, especially the replacement sales, have gone up. So I think, you know, there are a number of signs in the economy. And this is also helped by the government spending. I think government spending has gone up, and we are seeing the state utilities beginning to bid out. Rural roads, irrigation schemes, these are things that are very much on the anvil. So these are the things that are actually giving us hope.
We catch the conversation yet again when Mrs. Bhattacharya asked if the governor would allow low-cost housing loans, which in 2008 had helped in stimulating demand.
In 2008, when the economy started faltering, one of the things that really made the demand go up was the 8% housing loan that SBI gave. Of course, at that point of time, it was tagged as a teaser loan. We in SBI refute that because the due diligence that went for giving those loans were the same as would have been done for a loan at the regular rate. The only thing is, even your eligibility was at the regular rate. The only thing is, for first 2 years, you were allowed to pay at a lower rate. That was the only difference. But what did happen was that demand really kicked in. Today, the base rate is at 9.7. And I'm told that the real estate stock is around 4 years. Now, I was just thinking, is it possible that for a little while, something of this kind be allowed? Given the fact, sir, that this is one of the portfolios where the NPA is lowest. Even today, our portfolio, which is 30 lakhs and above, the NPA is only 0.29%. So there's been no bubble built up over here. And maybe we could also ask the realty players to bring down their rates also equally. Means there is already a record as to at what rates they've been selling. So something of that sort means, I don't know, this is something that could be used as a kicker for getting the retail demand started.
Well, I never say no to your ideas. We'll examine them. I think there is something to be said for the fact that with the slow pace of transmission, that some front-loading by the banks themselves may be useful. But I need to explore the thinking behind the earlier views on this and what kind of safeguards, if one decides to go ahead, would have to be put in. I do also believe that if real estate developers who are sitting on unsold stock started bringing down prices, that would be a very big help to the sector, because once there's a sense that the prices have stabilized, more people would be willing to buy.
Absolutely.
Now, I don't know what the level is, and it differs across the country, and it's not clear that in some parts of the country there's excess stock. But I think we need the sector to, in a sense, the market to clear.
Very true.
And with growing unsold stock, we need to figure out ways to do it. Some of it may be by making loans easier, but we also don't want to create a situation where prices stay high without at a level which means that demand may not pick up to the extent that is necessary. So we need to explore all these issues, but I think we are very open to suggestion. I will echo your view that we do believe that there is pickup, and hopefully if the monsoon doesn't deteriorate and in fact improves, sowing has been very good. You may see rural demand coming back more strongly, and that would be, I think, a very tremendous bonus to the economy.
We need to take a break, but we'll be back with more interesting excerpts from this tete-a-tete between the SBI chairman and the RBI governor.